All right, ladies and gentlemen, I hope you had a wonderful day. It was not a disappointing start to the week in terms of action, but man, today was a very awkward relief rally. So let me just start with the first awkward thing of the day. We opened up, there was some China news. People were expecting them to cut their rates. If you remember last week, the week before that, every single week, everybody was freaking out. They're saying, oh my gosh, China, stimulus, they're cutting rates, unexpected. What's going to happen? The trust, the property developers, they were even fixing the yuan. And now today, on the one rate they were expected to cut, they cut it, but less than expected. And then on the 5-year rate that could affect real estate, the Chinese government decided not to lower rates. Why this was important? Because everybody said this was weird. It was very confusing. That's what we started off with. That was the first awkward thing of the day. Then the second awkward thing of the day was that we gapped up. There was, again, this attitude of relief. If you remember on Friday, we hit a new low on Friday, then we bounced up just like barely right where we were the day before. You gapped up. People were feeling good. There was a rally all across the board. Again, some of the awkwardness, if you go and look at the NASDAQ, 1.5% today, that was part of it. But even with all of this relief, even right from the morning to how it played out, the other awkward part was, again, bonds across the curve were hitting a new high. The 2-year went up to 5%, did not break above it, but 10-year, 30-year, they all started to hit new highs once again. This was awkward as now there was a lot of strength. Again, in the middle of all of this, after the end of the last 2 weeks, NVDA was up 8% today, getting it ready for earnings. All the other chips did good, and then even Tesla went up 8%, best day since March 21st, I think, or 21, and that's just off of nothing. Literally nothing at all today. So this is what was awkward. I think even then, on top of it, going back to the NASDAQ and Dow, biggest outperformance even since the beginning of this year in March. So, like I'm saying, there was a lot going on. The theme was about relief. People didn't freak out. There was nothing bad that we woke up to. We got a little bit of data tomorrow, and then we have NVIDIA and then Jerome Powell. Those are the big main events, but for the most part, we had a little bit of relief, but it was awkward, and there is still a lot of moving parts. So Chad, that's just the intro. So I hope you like the video. I hope you drop your thumbs up. And if you don't know, we're live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there. It's free 99, but we got the plays, everything else. But let's talk about a little bit about Jackson Hole and where we move forward. But run it.
Walking to the couch, it's the joints on the legs. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, ladies and gentlemen, it's very simple. The calendar, there is not much. Do not forget. In my opinion, I think tomorrow is going to be the burn one day. All of the main action is going to happen on Wednesday after NVIDIA, and then Jerome Powell comes in on Friday. But there is a couple of things on the schedule. You'll get some Euro data and some other PMIs. I have them here on the calendar. You'll see it, but the only thing I'd be on the lookout for tomorrow is all of the Fed speakers. Barkin, he is not a voter, but if you look today or later tomorrow, you're going to get Fed Bowman and then Fed Goolsbee. Both of those are voters, so that could have an effect. Lately, we've been ignoring it, but maybe they kind of lead into Jackson Hole. That's the only thing I'd be watching. Richmond Fed, maybe it moves things again. If we are going to pay attention to data, we want it to break trends with the bonds, so just don't forget this over the last couple of weeks. It's the main thing I told you. When we get data, if you want me to react to anything that isn't NVIDIA or Powell, I want to see what the bonds do when the data comes out, and then the question is, can it hold that move by the end of the day? If it reverses, then you will have a problem. So that's something we've pointed out and seen a couple of times, but besides that, tomorrow should be very straightforward, but I would love to keep you prepared, and that's where Jackson Hole comes into play now. And whether you agree with this case or not, I want to put this out there just so you could get a general read of the narrative coming into all of it. So it highlights a lot of good points, but pretty much there is a lot of skepticism coming into Powell that he is going to provide any explicit policy detail. He is likely to reiterate that policy is not on a set path. There's some debate on whether or not he's going to push back against 2024 rate cut expectations, and that could be wild. That's where things get very hawkish. If you remember last time we had the Fed meeting, or last time you heard Powell, remember he said something about 2025 and people reacted a certain way? Well, maybe he gives us clarity, but it's one thing to push back against rate hikes by the end of this year. That's 2023. This year's almost done. But what does he say about 2024? That could be a big deal. So watch out for that. And then finally, just the title of the event is called Structural Shifts in the Global Economy. I mean, it's something not on here. This is from the rumor mill. I'll throw it in there. But another thing people are talking about is if they want to talk about inflation targets. Again, just given the title of this meeting, Structural Shifts to the Global Economy, some people are already talking about if Powell was going to change the inflation target and raise it, and then that way you're higher for longer. It changes the time frame if the inflation target got changed and they raised the bar higher. I know, mind-blowing. But anyways, that's all that's going to matter coming into this week. Like I said, I'm waiting for a shift with Powell. We want to see that 1-2 punch, even when we combine it with NVDA. And this was the question today. I think it's a very great question. People were talking about it in financial media. We saw it on Bloomberg. We asked it in the chat as well. And the question is, what do you think is more important? NVIDIA earnings, or is it going to be what Jerome Powell says? So I think it's going to be a combination of both. Like I said, I'm kind of expecting a bullish tilt out of Powell, but if he does say anything about no rate cuts in 2024, that might be taken as extremely bearish. But if he does kind of play the same card and doesn't give us no information, I think that could have a positive impact, especially the Japanese yields keep going higher. But that's pretty much everything. I think it's going to be simple coming into tomorrow. Like I said, watch that data, see how it affects the bonds, see what any of the Fed speakers do. Otherwise, you're going to be watching out for this awkwardness, the relationship between bonds and stocks, between value and growth, how other names play out. And even then, I'll just drop this in before we get to the plays, because some people are asking, like, why are some of these dividend names even selling off? Remember, just like last year, people were just loving them. Again, I always love them. It's not a time to, I always love them. Stop it. I drip it, baby. Don't play with me. Stop it. But why is that happening right now? And just think about it. The bonds are getting blown out. The yields are going higher right now. The yield on a bond, a 5-year, 10-year, is so much higher than in anything you could get on the S&P, even the average S&P return. So why would you take that risk, especially if economy is going up, down? We still don't know. It's like you could get a solid fixed return on fixed cash right now. Again, bill all the way down to just buying a normal bond. That is paying out good, and that's why you see this effect. Now, don't take that to heart where you're going to see that like forever, and that's a law that can't be broken, but that's some way of understanding a little bit about what we are seeing until things change towards the back end. Again, as when you're investing in equities, you may get your return at a later time, and that's where people are kind of moving a little different here. So I hope you're seeing it. That's one answer or explanation, but thought I would throw that in. And now let us get into the plays. So right off the bat, I did a couple of different things today. I made a couple of plays. Surprisingly, I flipped out a NEO. Again, there was a lot of that EV news. What Tesla did was wild. I think they went up because Bank of America upgraded XPEV, and they were up like 5%. NEO was like break even. That's why I was like, let me buy it. I think I bought them when they were negative. They rocketed up. I got a nice little flip on that, but overall, there was a lot of hype in that space, but I made a play there. But that wasn't the main one. What I did, and this one, I'm going to close it out. I think maybe you can see what happens. We've talked about it a little bit, but you might have remembered something called the curve steepener. So this is something that we've talked about in the past. If you remember, Bill Ackman talking about shorting the bonds and then Warren Buffett buying the short end. Well, that was a pseudo curve steepener if you combine the two. Well, I made a rollover today on my ZT bond. I rolled over to the next month, and why I did it early is because we're coming into policy events, and even if there was a shift, if a bond contract is expiring soon, the expiration may not reflect it, so it's better to move to the next contract. So holding 4 of those ZTs, I took a giant loss. It was like $7,000 on the rollover. It would have been $1,500, but I bought like 4 of them, so that was kind of the problem there. But I kept the same position. I'm actually ready to even go 50% higher, but instead I started with the curve steepener. So I plan on holding this and giving this play some time. There's a lot of reasons attached to it, but overall, holding this future, it's kind of like just buying the bond. But now that's its own play. So what I'm trying to tell you is that I'm grabbing the 2-year. That was a play I was already in. I did the rollover, but what I decided to do today was get a little taste of the curve steepener. So not only did I do that rollover, that's not the main thing, but after buying the 2-year, the other thing I did was I shorted the ZB. This is the 30-year. So first of all, I did it absolutely wrong because I should have went for the 10-year if I wanted to play the 2 10-year curve. Again, that's that chart I already show you. So I am going to play around with this over the next couple of days, but I bought the short end of the curve, not the shortest, but then I pretty much shorted the longest end. And the idea here is that even if rates go up, I don't think the 2-year, the one that we're long on, I don't think that'll go down too much, aka I don't think the 2-year yield will go much higher unless we announce more rate hikes to price that in. However, the 10-year and 30-year, they have room to go. Again, this is that bear steepener. Combine Buffett, combine Ackman, you get this trade. Buy the short end of the curve, sell the long end. So we'll see how this plays out. There's a little bit of risk. Again, the difference is like if this bounces up and then the 2-year stays the same, that happens. Movement across the curve, we're going to capture different returns. So I have more of the short end than the long end. It's not balanced out, but wanted to give you an update, and I thought this would be cool. So we'll see how that plays out. That is play number 1. Then play number 2, got to bring back Disney. I made a play on it. It came down to like 85.70. I think like 85.50. That's when I made my after hours play that we were able to flip out on earnings. I got in with 300 shares, got out, only made like $100. It was 30 cents because I was trying to get it off of the bounce and flip. That's what we did with Neo today. Gave me a quick return fast. I was able to get out. This one didn't do much. Then towards the end of the day, I wanted to hold it, but instead I took profits, and I'm like, I'll just double dip on this, and that's what I'm going to be looking at. Depending on the sentiment, depending on what's said here, it's like Disney wants to die, and it also wants to run after their earnings. So I think it's just kind of waiting for the overall market, and I think we're going to play this a couple times over the next couple of weeks. So I like it at this price, still even like it for the long term, but I'm talking about flip shares right here. So going to be eyeing those. Watch out for Disney. That is play number 2. And then finally, play number 3, baby. It's not just one, because you should know it's NVIDIA. I'm not going to buy it tomorrow. I may try to make a flip on it, but overall, I am going to wait till after earnings. But the other play is Cody. So I'm bringing this one up. It's related to medicine to cosmetics. What am I? I'm thinking biotech. Ozempic. No, it's not related to Ozempic medicine. This is makeup. We bought it there, and remember they had that Kim Kardashian news. We were up a decent amount. I held on to it too long. It came down, and I like the cosmetics as of late. The thing I don't like, this thing is up like way too much. It's ripping like all the cosmetics. So hopefully they do good, but like I'm saying here, watch post earnings of NVIDIA. Same thing here in the morning, cosmetic plays. This one could be good, and I think you have Ulta earnings on the end of the week on Friday, so we'll see. But that one could be a good one. I'm in those plays, 200 shares. I'm down on them. I think like 10% right now, so like $200 or something like that. We've been riding it, but be careful. I think it'll be risky, but depending on the report, we can make our play tomorrow. So those are the main plays. As far as everything else, again, I think I told you all of the moves that I made today. I sold out of mitochondria season. I don't know if you remember that. It was like one of those hype AI plays from a while ago. I was down on it a decent amount, and it just started going crazy. But again, I sell out. It shoots up another 20 cents. I walked away like 10-20%. I was not mad about it, but it kept going there. But GG, that one went back to green, so got out of that one. Flipped out of Neo, flipped into Disney, did the bond plays. Yeah, and that was pretty much it, man. Just going to be waiting, and then I think Pal and NVIDIA is going to provide a lot. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, it's 1, there's no shame in ever trying, but 2, if it's real, it will bring a change. That's it. Make it real. Bring a change about it. Otherwise, what are you doing? That's it, man. I spent a lot of time around people. I'm telling you, this one stuck. This was so spontaneous and impromptu today. I'm telling you, it even hit me, bro. If it didn't hit you, that's crazy, because it hit me. I didn't even think about this till I thought about it and said it. Somebody asked me. They said, am I a mentor? Especially to them. And I said, it depends on what. But I said, listen, all I know is I spent years around people in school, in different work environments, and spent years around people, but I really wouldn't call them my mentor. I'm just saying, if you spent years around the same people and there was no change, nothing real out of it came, oh my, Chad. So that's it, bro. That's it. But bring the hype. Bring the energy. Let's go, baby. You control your destiny and your attitude. So let's make the most of it, yeah? Yeah, that's it. All right, I'm out, man. I'm out. That's it. Let me find. I don't know how to exit this video. That's it, bro. I was getting awkward on stream afterwards, so I don't want this to be awkward. It's not awkward. I got to take out this devil symbol. You know, I'm talking about. I'm just too lazy. I'm too lazy to be an activist. I told you this, man. It's a problem. Anyways, Horn, I love you.